Hi guys, can we all see my screen now? Okay, great. So like I said earlier, we have two forms of manufacturing. Earlier on, I was trying to explain the assembly. That basically the assembly is a kind of setting where we have to just bring down different raw materials and just assemble them into one part, right? Example of an assembly is those that produce car, right? For those that produce car, they just get all of the raw materials and just fix them together, assemble them to become a finished product. You bring in the door, you bring in the engine, the seat, and all of that, and assemble together to become a finished product. On the other hand, the production here is the normal manufacturing we are familiar with. That is where we get raw material, either the one that cannot even be sold out until it becomes a finished product, or the ones we can even still sell before becoming a finished product. We take the raw material to pass through series of processes, different processing before it can become a finished product, and that might even take us number of days or weeks or a couple of hours depending on the type of product. So on a broader note, either the kind of product is fall under assembly or fall under production, they are still manufacturing because we have to combine different raw materials together to become a saleable finished product. Are we good? So that is just the basics. So let's move further. So before we go ahead, we have to look at the basic manufacturing terms as well on Quickbooks, right? The basic manufacturing terms on Quickbooks, as well as the general manufacturing terms we need to be aware of before in this particular industry, right? The first one here basically is what we call the BOM. The BOM here is your bill of materials. Now, what is a bill of material? So a bill of material basically is the list of raw materials you use in producing a particular product. For example, if you sell food, let's say you sell jollof rice, for example, the bill of materials in producing the jollof rice is rice, the spices, and every other material you put together to produce that particular product. So that is what we refer to as bill of materials. So before you talk about any product you manufacture, you need to understand what the bill of material is, right? So aside from knowing the bill of material, another thing you also need to know, which is very important, is you already know the bill of material, so you need to know each quantity of that bill of material that is required in producing a unit of that finished product. Are we good? For instance, you produce a jollof rice, for example, so you need to know how many cups or how many units of that rice is you are going to use in producing a portion of that jollof rice. Are we good? Or for instance, you produce bread, you need to know how many quantity of flour. We know flour is part of the bill of material, sugar is part of your bill of material, and yeast is part of your bill of material. So in producing 100 naira bread, for instance, you need to know how many quantity. You know that flour is a BOM, right? But aside from knowing that the flour is a BOM, you need to know how many units of each of these BOM that is required in producing one unit of that item or multiple units. Are we good? So that is the first thing you need to know. So you need to know, before you can even talk about any item you produce on Quickbooks or anywhere, you need to know what the bill of material is. So the types of material you need in producing that item, as well as the quantity of each of those material that is required in producing a unit of that item, right? Now, two, we have the finished goods. That one is very clear. The finished goods is the output of that manufacturing process, right? Which is what you sell to your customer. You produce car, your finished good is that car. You produce bread, the finished good is the bread, right? Very straightforward. Then the next one is what we call make to assemble. So make to assemble here is applicable to an assembly item, just like I differentiated between the two now, between assembly and production. Are we good? Now, the make to assemble here is depending on the kind of product and depending on the kind of entity. So the make to assemble here is that you you have the readily made parts, then you just take the ready made part, that is the raw material. You make the finished product when the customer places an order, right? For instance, you sell a very unique kind of car, maybe a customized car, let's say for instance like Ford, and you know that it is not a general type of car where every other person gets. So your own, because of keeping inventory for a long period or keeping the finished product in your warehouse for a long period, you might decide to adopt the make to assemble strategy. That is, as soon as the customer places an order, since you know that in assembling the product, it doesn't take you more than a day or stuff. So you can decide to use the make to assemble strategy such that it is when the customer places an order for that product, that is when you go ahead and assemble, right? And immediately after assembly, you go ahead and sell. So you already know that all of the part and the raw materials, all of the input are readily available. It's just for the customer to place an order for that item and you go ahead and assemble it, right? That is the make to assemble strategy, right? And the make to assemble strategy depends on the kind of product and depends on the kind of strategy that is being adopted by the manufacturer. Are we good? Then the next one, which is your make to order. So basically, your make to order here is also like your make to assemble, right? That is when you produce a product, that is for any item. The make to assemble here is for an assembly item, like I explained earlier, and the make to order here is for a production item, right? So the make to order here is that when the customer make an order, let's say you produce bread, and until when the customer, so that you don't have the bread in the bakery without nobody to buy it, and because of the types of products, maybe it's a perishable kind of product, you might decide to adopt the make to order strategy. Are we good? So the make to order here means, let's say when the customer make an order for 100 pieces of the bread, that's when you just go ahead and order. You already have the flour and every other stuff readily available. So that is your make to order, right? Now let's proceed. The next one is make to stock. Make to stock here is an opposite strategy to the make to order. To make to stock here basically means that irrespective of the type of product, so you are not concerned about if the customer has placed an order or not. So you just produce. You produce them down, the customer comes, they place an order and you sell. So you don't wait till the customer places an order before you sell the product. Are we good? So I'm very sure that most of us are already familiar with this stuff, but for completeness, I have to quickly run through them again, right? So the make to stock is an opposite of your make to order. So you don't have to wait till when your customer places an order before you produce. So you already produce them and have them in your warehouse or in your storehouse. Then immediately they place order, you just take them and deliver to them, right? Then raw materials, you know that these are the materials or the substances, these are the inputs basically that is put into the production of a particular product. Are we good? Then build. When you see the word build on Quickbooks, basically, you are not going to see manufacture anywhere on Quickbooks. You are not going to see produce. You are not going to see anything of such. What Quickbooks recognize as manufacturing is build. You are going to see the word build. So you need to take note of that, right? Then the next one, which is pending build. Pending build here basically means that you already know what build is. Build means to manufacture. So pending build here means the item that are still in pending for you to manufacture as a result of maybe some of the raw materials are not available, but the other raw materials you have mixed them together, so you are waiting to get delivery of another raw material before you finally build it. So that is what we refer to as pending build. So pending build is those items that is under processing, but you can't complete them yet as a result of shortage of a particular raw material. So you are waiting for the delivery of that raw material before you complete the production, right? Then work in process. Work in process here basically is your work in progress. You know that for the accountant, I'm very sure we all are accountant in a manufacturing account back then in school. We know what a work in progress is. So work in progress here means at the end of a particular period, all your raw materials that has been imputed into production but are yet to come out as a finished product. So we regard them as a work in progress, right? So there's a little difference between a work in progress and pending build. Pending build means you ought to have completed the production, but as a result of unavailability of a particular raw material, you have to pend it. So until you get the delivery of that raw material, then you complete. Or should in case where you have a customized order from a customer, you have to customize the production for them, and there's a particular material you're also waiting for to complete your customization, then you regard that as a pending build. But for work in progress happens at a particular period, maybe at the end of the month, at the end of the year, or at the end of the quarter. You have some items that has been imputed. Maybe your production take days, so that has been imputed as at the end of that period, but are yet to come out as a finished product, right? Then the last one is your which is referred to as unit of measure. So for all products you sell, either the one you buy and sell or the one you buy and use to produce, all products must have their unique unit of measurement. So the unit of measurement here is very important for both even the bill of materials and the finished product, because this is what we use to value that product, right? For instance, you have a product you sell, and you sell some in dozens and you sell some in pieces. For example, you sell a pack of table water and you produce a pack of table water and you also produce and sell 1 unit of table water. The pack of table water is 1 unit of measure, and that is a dozen, right? 1 unit of table water is 1 unit of measure, and that is pieces or each. So for every of the product you produce or the raw materials you even buy, you need to have a unit of measurement in measuring that particular product for sale, right? It's very important. And on QuickBooks, you can maintain a single unit of measurement and a multiple unit of measurement. I just cited an example now. If for same table water you produce, it can either be in dozen, that is 1 pack, or single. So if for the same table water you can choose to be a dozen, which is 12 in 1 pack, or just single, which is just 1, right? So that's what we mean by single unit of measurement and multiple unit of measurement on 1 single product, right? So these are the basic terminologies we need to get ourselves familiarized with as regards manufacturing on QuickBooks, right? So we proceed further. Now we look at the area of uniqueness, and this is the main area which is of great concern. So before I proceed, I want to be sure that I am carrying everybody along, please. Just 2 or 3 people can just send a chat. Let me know if I'm carrying everybody along. Okay, I can see some series of comments. Okay, Adebola Ladi Badmon says she does not understand the pending build. Now before we proceed, so that we won't have to come back to this again, let me quickly explain what the pending build means. So the pending build, like I said, basically means that these are the items that is meant. For example, you produce bread, right? Now you know that to produce bread you need flour, you need sugar, you need yeast, you need some other flavors, right, to produce that particular bread. So in the process of producing the bread, you discover that you don't have enough yeast. You want to produce 100 pieces of bread, right? And in the process of now producing, you discover that you don't have enough yeast to produce that bread. What does that mean? So what that means is that No, under normal circumstances, if you have enough yeast, you will have completed the production. But because there is no yeast, you have to just place order for the yeast for you to be able to complete that production. Then in that case, the production will be a pending build, right? It's going to be a pending build until the time you get the yeast and for you to mix with it and now complete the production. That's what pending build. Pending is that pending. Build here means production. That is the pending production, which is as a result of shortage of raw material or a shortage of a particular labor or overhead for you to complete the production. That is, admin it is there, then you have to wait till you don't have to wait. You will have completed the production since, right? So I think that is clear now. So let's proceed. And I really need us to pay some certain level of attention here to this area of uniqueness. So like I said earlier, we are looking at the key areas of each of these industries on QuickBooks. The first one is the inventory item setup, right? Now, in setting up your inventory item, that is this item you produce, there is a special way you set it up on QuickBooks, which is quite different from the way you set up the other ones. It is very, very different, and you need to take this one very key area for reporting purpose. You need to ensure that this particular item is being set up properly for your reporting purpose so that you won't have an inaccurate report. It is very important. That is the first area of uniqueness. The way you set up the item you produce is way more different from the way you set up other items, maybe the service you render, the product you buy and sell, and all of that, right? That is the first area of uniqueness. The second one is the way you account for your raw material and conversion costs. The way you account for because your raw material here is not the normal item you buy and sell. You buy and produce. So the way you account for it is totally different from the way you account for the kind of material you just buy and resell. Are we good? And for the conversion cost here are those costs necessary to convert the raw materials to finished products. And these are your labor costs, your overhead, and all of that, both direct and indirect, right? So the way you account for both are totally different. Are we good? That is 2. Then 3 is item production. Another area of uniqueness is the way you produce this item. So the way you produce this item is also totally different compared to the way it applies in other industries that are not into manufacturing. That's another area of uniqueness. And the last one is the production losses / wastages. That one is so common because you agree with me that everything that you input is not what will come out. But if you have some machine efficiency and all of that, it's just going to be reduced, but it cannot be eliminated totally. You agree with me, right? So all of these production losses and wastages really need to be accounted for, right? You need to be accounted for. Okay. Now, to make this particular section more interactive, we are going to be using a Coca-Cola or a cola drink as what we want to, as the item we produce, right? So I need somebody very quickly to give me, what do you think are the bill of materials for a cola drink? You know your cola drink, maybe Coca-Cola, maybe Pepsi, maybe Biggie Cola, just any drink or any cola drink as an example here. So what do you think are the bill of materials for a cola drink? Somebody should, okay, Adebola says sugar, that's correct. Logo Kene said water. Water is correct, but on the other hand, it is not really correct. I'm going to explain why, right? Then color. Yeah, that color is what we call the cola flavor, right? The preservative is also the cola flavor. It's also part of the cola flavor. Fine. There are still other things you have not mentioned. Bottle, yeah, great. Bottle is also the bill of material, right? The cola itself, that is the cola flavor, yeah. Okay, you said caramel. Okay, great. That is also part of the bill of material. Then we have some of those things you have not mentioned. Can somebody just try? Okay, we have caffeine. Now, laborer is not a bill of material. Do you know why? Because the laborers, they are not a material, they are they will be accounted for as part of the conversion cost. What we refer to as the bill of material are those materials, just the materials, what you can see that is being used in producing a particular item. So laborer is not there. Okay, phosphoric acid, alright. Then there are still a couple of things you have not mentioned. Cork or cover, yeah, that is true. Label, yeah, true. You have mentioned all. You have mentioned all. You have mentioned all. That is perfect. So, like I said earlier, that before setting up the item, you need to know what are the bill of materials. Alright? You need to know what are the bill of materials. And you also, aside from knowing the bill of material, like I said earlier, you also need to know what are the quantities of those bill of materials that will be required to produce a particular unit of that product. We all have mentioned everything. You have mentioned caffeine, phosphoric acid, label, bottle, the cap, and the color flavor, the preservatives, and all of that. We all are correct, right? And I'm very glad for that, right? So these are the bill of material. Now that we know the bill of material, what's next? So the next thing is to now know what are the quantities required to produce a unit of that item. Are you good? Now for this item now, we are using a cola drink, right? I'm going to use 1 cup. Am I correct? Okay, tomorrow Chinye Obu said she's leaving and joining back tomorrow. We are not having a class tomorrow, till next weekend, right? So it's always on Saturdays and Sundays. Are you good? So maybe I'm going to send you a video download link because the session is being recorded, right? Okay, and the video download link is going to be sent to only the guys that are here to the end of the course, right? So those are only the ones I'll send the video to for them to be able to see areas they really need some clarifications on, right? So aside from Chineye Obu, because you already gave a permission, every other guy, you are only entitled to request for the video if we are here to the end of the course, right? So as I was saying earlier, we already know the BOM, right? You know the bill of material. The next thing we need to know is the quantity. So in producing a cola drink, I need a cup, and the cup I'll need 1 cup. Are you good? So 1 cup is the quantity I need in producing 1 cola drink, right? That is the quantity of the BOM. Then the bottle, I'm going to need 1 bottle as well, right? Are we good? The label, I'm going to need 1 label, right? Now these are the ones that are easy, but for the other ones, the caffeine, the cola flavor, the phosphoric acid, and all of that, you can't just get them. So you have to do some sort of costing or remeasurement to know how many kg of this particular item that is going to be required to produce 1 cola. Are you good? So you know the caffeine, they are not just something they are not in pieces like the cover, like the bottle, like the label, right? So they are in maybe kgs or maybe in liters and all of that. So you need to know, you need to drill it down to per unit, that each of these other stuff, how many of it is required in producing these products, right? So for the purpose of this lecture, for the cola drink, because of time constraint, we are going to be assuming that we need 4 bill of materials to produce a cola drink, and we are going to be using the cap, the bottle, the label, and a cola flavor, right? Now we already know that to produce one, you need 1 cap. To produce, you need 1 bottle and you need 1 label, right? all of this is being produced by another company. So these are the raw materials you buy. Are you good? And even if this stuff is being even produced by maybe your subsidiary, you need to still account for it as something you buy. Do you get? Because it's not internally generated, right? Like water. That is why I told her earlier that water will not be part of it. Because water, we don't buy it. We only buy the filters. And the filters will just form part of your consumables, right? So the filter, if you can quantify the filters that you use, the filter is used on all the waters. So it's not something you can really quantify per unit. So they are regarded as your consumables. And the water is something you generate internally, because water, you get it naturally. You just enable water to make more sense. That is why you have filter to make it more clean, right? So the water is not something you buy, it's something you just get. You have the bowl and all of that, right? So that is why water will not form part of our bill of materials, right? Now, for the purpose of this lecture, we are using 4. You are using the water, you are using the cola, the cola flavor, the cap, the bottle, and the label. So that is what we assume that is the bill of materials needed for producing the cola drink, right? Now let's go ahead and set it up, right? So we said the first area of uniqueness is the setting up. So now, before setting up an item, an assembly item here means the item you produce, either the one that is normal assembly or production. The first thing is to know the item type, right? So let's come straight down to our Quickbooks here. I want to assume that we all can see my screen, right? So before we go ahead, I need you to jot this down, right? Before we go ahead and set the item up, you need to do what we call the chart of account setup. So what are you setting up on the chart of account? You are setting up 3 things. Are you jotting? You are setting up the sales account of that item, that is the finished product, in this case, which is your cola 50 cl, for example, right? You need to set up the sales account. That is, when I sell this product, where does it report into? Are you good? That is 1. 2, you need to set up the cost of production account, and your cost of production will clearly differentiate between the cost of materials and cost of conversion, that is your labor and overhead. That is 2. Then 3, you need to set up the inventory account. So the inventory account here is the account that keeps track of the total amount you have in your warehouse. If you adopted the make to stock option, that is, how many units do you have in your warehouse? If you want to know the amount, you see it in your inventory account. That is the value, and you can also break it down to the number of units. So you need to ensure that these 3 accounts are already set up on your chart of account on Quickbooks. Are we good? Now at this junction, please, sorry, I have to be going back and forth. I really need to know if you're on the same page, right? So just type in. If you are enjoying it and you want me to proceed, please just type. So up to this junction, do you have any questions? So let me quickly attend to it before I go far, please. Okay, Justina said I should repeat the area of setup. All right. Any other question from anybody? Any other question? You can just drop it down. Okay, aside from Justina, we don't have any other question, so I can proceed. So for Justina, I'm talking about the setup. So like I said earlier, we already know that this is what we produce. That we produce cola, and we have already defined the bill of material. So Justina, do you understand the bill of material? Before I even proceed, just tell me, do you understand the bill of material? Let me know if you understand before I proceed. Just type. Okay, great. You understand the bill of material. Yeah, Chineye, can you mute your video, please? Thank you for joining. So you understand the bill of material. Fine. Right. Now, we already know what the bill of material is. So what we are saying here is that we have to set up that item on your QuickBooks or on whatsoever accounting software you find yourself using in your place of work or anywhere you find yourself, right? So, and that is the number one area of uniqueness. So you need to set up the inventory item in such a way that to suit the production activity. So that is why before setting up the item, you need to know the bill of material and the required number of quantity needed for the bill of material, right? So that is one. Okay, now the other one, now having known the quantity needed and the different bill of material, the next thing is to now go and set it up. So I now said that before you set it up, you need to take note of three things. That is, you need to do your chart of account setup. If you don't know what the chart of account, let me explain. Your chart of account here is just your list of accounts, so to speak. Just the list of your accounts that determine the way your reports look like. These are just all your accounts. Your expense account, your income account, your asset account, your bank account. These are what we refer to as chart of account. So before you proceed, you need to set up the chart of account for each of these, for this particular production purpose, right? And this chart of account is three. The first one, like I said, is the income account. That is the sales account. That is when you sell this particular product, which is your Cola 50cl, what account does this report to, right? That is one. Then two is your cost of production account. That is, when I produce this item, what is my cost of production? Where does this my cost of production report to? And that is two. And your cost of production should be duly broken down into the cost of material and your conversion cost. And your conversion cost here comprises of your labor and your overhead. That is two. Then three, you need to also set up the inventory account of that cola. So what this means basically is that when you produce this cola and you are here to sell them, you have them in your stock, you have them in your warehouse. So that is the account that shows the value of the item you have in the warehouse and how many units is it, because you have not sold it, so it's still part of your asset. So you need to set up these three accounts before you proceed to you need to set up this three chart of account before you now go and set up the inventory item itself. Justina, am I able to answer your question? Okay, perfect. So we can proceed now, right? So let's go and set up our chart of account. There's no time, please. Right? So this is our QuickBooks. So to set up your chart of account, are you good? You click on company from the menu bar, then you go to chart of account. This is one way to set up your chart of account. Another way here is to click on, use your keyboard shortcut and click on Ctrl A. Are you there? So that is for the chart. So like I said, we'll be setting up three accounts. The first thing is to set up the sales account, which is your income account. So to do that, you click on accounts. Can you see that? You click on account from the downside here and you click on new. Are you good? Or alternately, you click on Ctrl N. You are still going to arrive at the same place. So you specify what is the category of this account you want to create. So it's an income account. So you click on continue. So the account name is sales of Cola 50cl. That is, when I sell this product, it is going to report in this account. So if I want to know at the end of a particular period how much sales I make on this particular cola, so if you come here, you see the total amount. Are you good? So I'm going to click on save and close. So that is one. Then two is to create your cost of production account. So I said that your cost of production should duly break down your material and conversion cost. So you just set off cost. So you have to put a breakdown under the cost of materials and cost of and conversion cost, right? So that you can break down your production into different headings. So you don't just see cost of production and you don't know what make up the cost of production, right? So follow the same process. Click on activities and new there, or you click on Control N. So what did I want to set up? You click on other account type. So this account is the cost of goods sold, right? Click on continue. Then you make it to be cost of production. Are you good? So you make it to be cost of production. Are you there? Then you click on save and close. So you can see now, this is the cost of production. So on this cost of production, we need to have some breakdowns. We need to have the cost of material as well as the cost of labor. Are you good? Now to do that, you're also going to go back to the account, then say new, then other account type. You're also going to specify cost of goods sold, continue. Then here, the account name is going to be cost of materials. Are you good? Then this, you want to make this cost of material a breakdown under cost of production. So you are going to tick and say this is going to be a sub account to cost of production. Can you see that? Then you click on save and close. So when you scroll up, you are going to see the difference. Can you see that this is your cost of production? You can see that cost of material is under it. You can see it's like a sub under the cost of production. Are we good? So this is the breakdown of the cost of production. So we do the same thing for your conversion costs. So you click on other account types, then click on cost of goods sold, continue, then the account name is going to be conversion cost. Are you good? Then make this to also be a sub account. So this is also going to be a breakdown under your cost of production. So you say save and close. Right. Are you good? So now these are the two elements of what makes up your cost of production. You can see you have the conversion cost and you have the cost of materials. However, we are not done because your conversion cost still have a breakdown again. Your conversion cost comprises of your cost of labor and cost of overhead. Comprise of your labor cost and your production overhead cost, right? Your labor cost, the money you pay to the factory workers, the wages you pay to them, their overtime and all of that will be under your labor cost. Your production overhead will be all the other costs, your rent on the factory, the electricity and all of that will be under your production overheads, right? So we still need to now also break down your conversion cost into two. So your conversion cost will also have a breakdown of the labor cost as well as the production overhead. So how do we go about that? You also click on account, then say new. Are you good? Also the account types to be cost of goods sold. Click on continue. Then your account name is going to be labor cost. Are you good? You have your labor cost, and this is going to be a sub account. That means it's going to be a breakdown under conversion cost. Are you good? Then you click on save and close. I want to show you now. You can see the breakdown under conversion cost. It has labor cost. Labor cost is under conversion cost. Conversion cost is under cost of production. Are we good? Right? So we'll repeat the same thing for your production overhead. So you're going to say cost of goods sold, continue. Then account name is going to be production overhead. Are you good? This is also going to be a sub account to conversion cost. Then save and close. Right. So this is all about your cost of production. So that is under cost of production. You have conversion cost and cost of materials. Under conversion cost, you have the labor cost and production overhead, right? That is the second one. Now, the third one of what you need to set up on your chart of accounts is the cost of your inventory asset account. That is the inventory, and that is the account where you have the value of those items you are yet to sell that you have produced, right? And that is going to be, your inventory now. That is your stock. Your stock is a current asset account, right? So you also come here, click on account, then say new. The account type is going to be other current assets. Can you see? You can see that inventory fall under your other current assets. So you say continue. So you come here and make the name to be inventory of cola 50 cl. Are you good? You can see that. So this inventory account is going to be used to keep track of everything related to the inventory cola 50 cl. That is what you have in stock that you are yet to sell. So I'm going to save and close. So that is the first thing we need to do. That is setting up all the charts, and that's what we just did now. Guys, before I proceed again, I want to know if we're on the same page. Can you ask question? Can you ask questions so I can know if you're on the same page before I proceed? Are we good? Can we ask questions before I proceed so I know we all are on the same page? Okay, Uchenna said, what of the materials inventory? The materials inventory, we already have it here. Let me show you. Okay, I'm taking the questions one after the other. For Uchenna, I said, what of the materials inventory? The materials inventory is here. We already have an account for that by default. Can you see? Can you see inventory raw material? So this is the inventory account that takes care of all the raw material. And this is the inventory cooler, which is for the finished products. I think that answered your question, right? Then the second one here is from Dobra. What if you have so many inventory, one has to post all to inventory? Yes. So everything goes there. But should in case you have just few items you produce, so you can break down each of those items you produce under the inventory account. Are you good? Then those are the two questions. I think I've answered that. So we can proceed, right? I want to see 3 years. If I can write down, please. Can I just see 3 years? Annie Baby is talking of what of returns. That is if the return we'll still look at that. That is under the transaction processing. Okay, yeah, so I have yes here. Which software are you using, online or desktop? This is the desktop, right? Now let me quickly add that for a manufacturing concern, the online version of Quickbooks does not have the manufacturing module. Are we on the same page? The online version of Quickbooks does not have the manufacturing, so it cannot work for a manufacturing concern, right? So it is only the desktop version, which can also be hosted remotely or online. It's only the desktop version that has the manufacturing module. So if you are a manufacturing concern, you can use the QBO. Are you good? That is the Quickbooks Online, right? So I have a lot of yes here, so I can proceed, right? Okay. So now that we have structured the chart, let's go ahead and set up the item. Are you good? So to set up the item, we are going to be following this guideline we have here. They said, what are the required information in setting up an assembly item? The first one is to ensure you specify the item type. So I'll be taking it one after the other, right? So I come here to set up a new item, click on list, then click on item list, right? Are we good? Click on list, then item list, then here click on item, then click on new. So here we are about to set up a new item. So what the instruction I have here is that in setting up a new item, the first thing I need to take note of is the item type, right? So I'm going to come here. Your item type here is very important. Your item type here is very important. So the item type you are going to select is going to be inventory assembly. Are you there? So the item type you are going to select is inventory assembly. Then here you are going to select what is the item name. So after the item type, the other requirement here is to select the unit of measure, right? So the item name here is going to be your cola 50 cl. Are you good? So you have your cola 50 cl, and the next thing here is to specify your that is your unit of measure. So unit of measure here is each. All right. Then here, this cost, we are coming back there. So the next requirement here is the income account, right? So the income account here is going to be the sales cola that you created earlier, right? So your sales, your cola 50 cl, this is going to be your income account, right? The next thing is your cost of production account. That is when you produce this item, where does it goes to? And this is going to be the cost of materials. Can you see that, which is under your cost of production? So this is going to be the cost of goods sales account, right? Then you are going to put your description here. Just copy and paste the name. So this is your description, right? So the next thing here is to specify the inventory asset account. Now the inventory asset account is here. That is, when I produce this item and I'm here to sell them, where does it report to? And that is going to be the inventory cola 50 cl account. So this is going to be your inventory account, right? Then the next thing is going to be your selling price. Now the selling price here is quite optional because it is not fixed, and it is not compulsory. It is optional because you might have series of selling prices, different prices for your wholesalers, for retailers, for dealers, and all of that. So you can decide to put the price here, or you put the price when you are selling. So you have that option. Are we good? So that is about the selling price. Then the next one is your cost price. Your cost price here is not what you put here. So the cost price here will be the total bill of material cost. I'm coming back to that. The cost price, this is a production. The cost price you don't know until you sum up the total cost of those items required in producing that product. So that is what will form your cost price here, right? Then the next one now is to specify the quantity available. That is, how many of these items do you have available as such when you are setting this up? Maybe you are just migrating from manual to an automated system, and you have like so number of quantity in your warehouse. So that is what you are going to fix in here. But before we go ahead and do that, let's now bring in your bill of materials. That is what I said earlier, our BOM, right? So let's go into that. So this is where you specify all of the items that is required in producing this cola in their respective quantities. Are you good? So you are going to come here and now specify that in producing this cola, we are going to use bottle. How many bottles? We are using one. Can you see this is where you specify the number of quantity of bottle you use in producing one cola, right? Kindly take note that if your kind of business does not sell in units, there are some like cola now, you might not be selling one. You might be selling in pack, right? So if you sell in pack, it means that you are setting up that item in pack too. So which means that, for instance, if you sell pack by pack, your unit of measurement for bottle here is going to be 12, not 1, because you don't sell in pieces. You only sell in pack, right? So that pack is going to use your own unit of measurement, not 1. Are you good? But the assumption here is that we sell this item unit, we sell it in pieces, right? Then the next one, you specify the cap that is required to produce this. How many cap is required is also 1, right? Afterward, you specify the label. How many label is required? Which is what? 1 as well, right? So you use 1 cap. And the last one is you specify your cola flavor. So for the cola flavor here, it is actually, the cola flavor is not something of pieces, just like the bottle, the label, and all of that. The cola flavor is valued in kg. So we now discovered that the cola flavor, we are only able to use maybe 0.1 kg. So 0.1 kg of cola is needed to produce 1 unit of this item. So what do? You come here, your quantity is going to be 0.1, which means that out of 1 kg of cola, only 0.1 is needed to produce 1 unit of this item. Are you good? So from this now, you can discover that the total BOM cost here is 49, and that's what you are going to put under your cost here. So you have 49. Are you good? Right? So let's assume that at the time we are setting this up, we just have 20 of this item in stock. So how do you arrive at this total value? So this total value is this quantity on hand multiplied by your cost, right? And as of what date? Let's say we have this as at 30th of June, right? So when you are done, you just click on OK. So that means we are done setting up the item. So you can see now that here we have specified all of the bill of materials that is required in producing this item in their respective quantities. That's very important. And we have also specified the various accounts, right, from the cost of production to the sales, then to the inventory. Are we good? And we have also specified the value we have on hand So we have also specified the value we have on hand as at a particular date. Are you there? So when you are done with this setup of this item, then you go ahead and click on OK. Okay, so you just say yes. So we just put a sales price here, just an optional price. Like I said, the sales price here is not constant. So let's say our sales price is 100 naira, right? So we can sell at 90 for some set of people, maybe wholesalers and all of that. So just say okay, and you can see that we have set up this item. That is your cola 50 cl, right? So we have set up the item. So that is one area you need to take note of. So before we proceed, I have some questions to attend to here, and if you also have a question, just drop it. Samuel Bukola says, how about a company not into manufacturing, right? We are still coming there. You agree with me that we are taking this industry by industry. So we are just looking at how a manufacturing concern handles this stuff. So when we get to other service industry, like our next one is the financial service, the real estate, and all of that, we are going to look at how does this apply to a service-based company, right? So we are still coming there. So we are just starting. Then Dobra says, what if you sell in unit? And that's what I just, in unit, dozen, and pack. So you need to choose one unit of measurement you use, right? For instance, if you sell in dozen, you need to choose the one you used to selling most of the time. So let's say you used to sell in unit most of the time. So it means that you are going to, the unit of measurement and the bill of material will be for units. So when you are now selling in dozen, let's say you sold 2 dozens. So that is 24 units. So when you are doing your sales, it means you sold 24 units, which is 2 dozens. Right? So you just need to know each of those pack, how many is inside. Then multiply by the number of units. Are you there? So we are going to look at that too when we are on the sales section. Do we have more questions before I proceed? Hello? Okay, I'm able to answer Samuel Bukola. How did you get 49? Now that 49 there, let me show you again. The 49 there is the total value of the total bill of material, the total cost of all the bill of material that is required in producing that item. Can you see? Can you see the total here? That is, bottle cost 32 naira, cap cost 2 naira, label cost 5 naira, and the flavor cost 10 naira. So everything in total is that 49, and that is how we got this 49. So the 49 there does not just appear there. It is the total value of all, the total cost of all the bill of materials needed in producing that item. Are we on the same page? Okay, you got it now, right? Okay, in the absence of no questions, so let's proceed. So that is, we have handled the first area of uniqueness. That is the inventory item setup, right? Right, so the next one is the material and conversion cost. So when you buy your material, that is the raw materials, how do you account for it? We still really have a lot to discuss, but I'll just have to manage the time. So we just have to talk about everything, right? So how do you handle the material and conversion cost? That is, when you buy the material, how do you account for it? So let's take a scenario that we bought a particular, all those material. Let's say we buy them from the same supplier. So when you buy all of this material, how do you account for it? So you account for it using what we call the bills, right? The feature is called bills. Right? So we have the feature called the bills. That is what we use to receive your materials. All right? So when we just get materials, how do we receive it, right? So you click on vendor. Are you good? Are you there? You click on vendor and you say receive items and enter bill. Can you see that? That is to receive the item and enter a bill for that supplier. So you are doing two things together. You are receiving the item into your production department, where they are going to use the raw material for production, and at the same time you are issuing out a bill. That is, you are accounting that you are owing that supplier the total amount of that product, right? So you go to receive item and enter bill. Are you good? Then you specify the vendor. So I can quickly create the vendor. Let's say the name of the vendor is let's say Dobra. Okay, limited. So let's say this is the name of our vendor. Just say okay. So this person we bought the items from. We bought the item on the 1st of July, and you specify the terms. Maybe the bill is due on receipt. Then you specify the memo. So the memo can be purchase of raw materials. Alright, so under the item section here, you specify what you got from this supplier. So we bought bottle. We bought 500 pieces of bottle from this supplier, and we bought it at that same 32 naira. Are we good? We also bought cap from this same supplier. We bought 1,200 units of caps from this supplier, and we also bought the label. Let's say this is 5,000, not 500, 5,000 bottles. So we bought the label. We bought 1,600 labels from this supplier. Can you see that? And we also bought the cola flavor. We bought the cola flavor, which is valid in kg. We bought 100 kg from this supplier, right? And the total here is 180,400. Can you see that? So we are receiving all of these items into the stock, and at the same time we are issuing out a bill. That is, we are counting that this particular supplier, we are owing them, right? And this is the date we received it. We received it on the 1st of July. All right, so I just go ahead and save and close. Yes. So after saving now, I have received this item into my raw material. So let's confirm. When I go to list, item list, you can see that all of the items have increased. My bottle is now 5,023 units. Cap is 1,230. Cola flavor is 104. So in summary, all of this has been received into my production department. So that is how you receive your raw material, right? Are we all on the same page? Sorry, I have to be going back and forth. I want to know if you're on the same page. Can you just type in? Let me know if you're on the same page. So you are telling me I can proceed, right? Right? Okay, that's great. So we can proceed. That means everybody is following me. That's perfect. So that is how you account for the material cost. So the other one is for the conversion. So for the conversion, we have your direct labor. Under direct labor, all the payments you make for your salary of the factory workers, the rent you paid for the factory, everything that has to do with other costs related to putting that product in finished product aside from the material cost. So on a broader note, we broke it down into your labor cost and your production overhead cost. Are we good? So we'll come back here. Now, to account for your labor cost as well as your production overhead, those ones are what we paid for outrightly. Your factory workers, you pay them at the end of the month. Immediately you are paying them, it is going into your direct labor cost, your labor cost in general. Your production overhead, as you are paying for the rent, for the lighting of the factory and every other stuff, everything is going to your production overhead account. So in posting that, you use the feature we refer to as your write checks. In Quickbooks, you use the write checks to post your conversion cost. I don't know if you are really jotting. Some of this stuff are not on the tutorial note. The tutorial note is just the key points, and I need to now explain further, right? So the conversion cost, you post the conversion cost using the write check. So how do we go about that? So you come to your vendors as well. You can either come under the vendors or you come on banking and click on write checks, right? Let me repeat that. You come to banking, then say write checks. So the first thing is specify where the payment is coming out from. I paid for these expenses from my Zenith Bank. You select the date, pay to the order of who did you pay this money to, right? Then specify the memo. So let's say factory workers, salary. Then under the expense section, you will now select the labor cost directly here, because the factory worker salary is a subset or is under your labor cost, right? So the factory worker salary forms part of your labor cost. So you are going to specify the labor cost directly here under your conversion cost, which is also linked to your cost of production. So you have the amount here to be for this particular labor cost, you have let's say the total labor cost you paid was 500,000. So you can copy this memo back here and paste. So we also paid any other cost that relates to maybe your production overhead. So let's say we also paid for on this same date from this same bank account. We also paid for so let's say you paid for office electricity of 10,000. So I'll say office electricity, or sorry, factory electricity rather. So you have your factory electricity. So this forms part of your production overhead, right? So this forms part of your production overhead, and as soon as you are done, you go to your save and close. So that's how you keep posting all your conversion costs. Immediately you pay for them, your conversion costs, maybe labor costs or production overhead, you use your write checks, and under you specify the bank account or where you pay the money from, you specify the date, then you put your memo, and under the account here you select the labor cost or the production overhead cost directly, right? So that is about your conversion cost. Guys, can I proceed? Okay, great. So I can proceed, right? So so the next thing now, which is the next area of uniqueness, is now the item production, right? Now that we are done with setting up the item and accounting for both your material and conversion cost, we can now go ahead to produce the item. So let's say at a particular date, from the production department, we're notified that on this day so number of units was produced in the factory. They are going to notify you as the head of account that this is the number of items, or the inventory manager, that this is the total item produced. So it's your duty to now come on the system to also replicate the same thing, because they have actually done production in real time physically. So you need to come to the system to also do the same, so that because they done the product, have also converted all the raw material. So you have to come here to do same thing, so that the raw materials to be converted. So the essence of the production here basically is to reclassify the raw materials. That's why we imputed the bill of materials earlier. So the essence of this is to reclassify the raw materials from the raw materials account in their respective quantities and taking everything to the finished goods, because everything in total, in aggregate now, is what forms part of your finished product, right? So you have to come back as soon as the stuff is done physically. You have to come back on the system to replicate the same thing. Are we good? So to do that, you come right here, you click on vendors, click on inventory activities. Are you there? Then you say build assemblies. So like I said earlier, right on QB, you are not going to see anything like production or manufacture or whatever. You are going to see build. So build basically means you have some item that are pending. You have some items you want to build. So that's when you use the word build, right? So you go to your build assemblies. Then here you select what item. So all the items that you usually put, everything will be listed here as far as you have set it up. So it's specified what item you produce, right? So we produce cola. So you see that immediately I select cola, it pull up all the raw materials I need in producing this item in their respective quantities, the way I set it up. You can see that for bottle, said I needed 1. For cap, I needed 1 as well. For label, 1. And for the cola flavor, I'm going to use 0.1 based on the unit of measurement and the required quantity we set up we imputed during the setup. Are we good? Now, this is everything. So let's say I produce 100 units, or let's say I produce 120 units of this item. So what do you do? So you specify the date. The production manager gives you a printed out copy of everything they produce and the date and every other. So that's what you are working with, and you are replicating the same stuff here, right? So I come here, then right, so you come here, and under the quantity to build, can you see that I haven't selected the date of production? Under the quantity to build, you now specify the number of quantity. I typed in 120. When you click on tab, what happens? You see that the quantity needed change, which means that in producing 120 item of this cola 50 cl, I'll be using 120 bottle, I'll be using 120 cap, I'll be using 120 label, and I'll be using just 12 kg of my cola flavor. Are you good? So that is why I said you need to get your bill of material 100%. You need to ensure that you get it right and you have done the proper setup, before you come here to do the production, because if you don't get the BOM properly, it's just going to mess up the whole stuff, because at the end of the day you discover that it's going to affect your reporting big time. Your raw materials inventory is going to be showing a wrong figure, your finish will also be showing a wrong figure, and the balance and the quantity on hand of each item, both the raw material and finish, is going to be inaccurate. So that is why you need to ensure that you have gotten the BOM properly before you go ahead and do your production. Are we good? So in producing all of this is what is required. So when you are done, I just click on build and close. So immediately I build this, it's going to take off this number of quantity out of my quantity on hand, because it's no longer part of my inventory raw material. It has now been in total and in summation as part of my finished product. So immediately I finish producing, it means my quantity on hand for the cola 50cl is going to increase by 120. That is just by the number of units that you just produced. So it means I have additional 120 of the stuff to be able to sell out, right? So it's going to have an additional 120, right? So immediately I do this, it's going to pass the entry between both sides, right? So you just do your build and close, as easy as that. So I'm going to ignore all, right? So now I'm done with the production, right? And the old stuff, the entry will have been passed between your raw material and FG. So if I should come back here, right? So that's about the production. So like I said earlier, you need to ensure that the whole stuff is perfect. You get your BOM right in terms of the type of material you needed and their respective quantities, right? So that's about the production. Can I proceed? I need like 2 more years. I want to be sure that we all are following. Okay, perfect. So I can proceed. So that is about the production. You can see that we have produced the cola now. So before we now go to production losses / wastages, let me show you, after you have produced now, at least customer will start placing orders, you sell, right? So in selling now, you are going to issue out an invoice to the customer for the number of units they want to buy from you. So how do you do that? You can easily click on create invoice from your dashboard here, or you click on customers, then say create invoice. So you are still going to arrive at the same place, right? Are we good? So select the customer. Alright, then you select the date which you made this sale. So this is an income. Specify the date of sale, then specify what you are selling or what you sold, that is your cola 50cl. Specify the number of quantities. Let's say we sell 100 units. Now for those that are talking about what if you sell in pack. Now let's say here, we measure this in units, right? We the unit of measure of this item is in units. So let's say I sell 8 dozens. So your 8 dozens simply here will just be 96, right? That is 96 units. 8 dozens is 96 units. That is 12 times 8. It's as simple as that, because this product is denominated in units. So if I now sell 8 dozens, so my 8 dozen is equals to 96 units. As simple as that. That is 12 in a dozen times 8. It's as simple as that, right? So that is your 96 units. Then you put the rate. So you can change your sales price. Let's say you sold it at 110, right? Can you see that? So you sold this at 110. Are we good? And that is 10,560, right? Then when you are done, you just go ahead and save. It's as simple as that. So immediately you save this, that now it means that this particular customer you have issued an invoice to this customer and the customer is owing you this amount. So when the customer now pay, you go and use your receive payment to record the payment of this customer. So I just save and close. So now I have sold 96 items of this particular product. So it means that 96 is out of the inventory now, and it has gone to sales because I sold out 96 already. So it's going to reduce the balance you have in stock, right? And now your sales has increased now that you already sold the product. Are we good? So that is how you record the sales. Are we there? It's as easy as that. Okay, so another area of uniqueness we have is the area of production losses / wastages. For your production losses, like I said earlier, that the production losses can only be reduced to the minimum, but you can't really eliminate it totally. So you can only reduce it to the minimum as a result of the machine efficiency. So if the machine is inefficient, it's going to increase the level of wastages, right? So when we have wastages, either on your raw materials or your finished goods, the kind of treatment you give to it is the same. And the essence of this wastage is that this stuff has become a waste and it is not part of what you have in stock already, right? Another thing you need to note is that your production losses / wastages is part of is an additional expenses, right? Because ordinarily, if these items did not become a waste, you should have used them to also be added as part of the raw materials to the production of a particular item. It's as easy as that, right? So it is because of the fact that there is the stuff is already a waste and you can't use them for production again. That is why it is useless, because you'll have used it to produce an item and you sell that item, right? But because you can't use it for that purpose again, so it becomes a waste or a loss, and that leads to an additional expenses, right? So how do you account for your production losses? That's very simple. Now for your production loss, so you come back here, that is the losses on your production, that is on the raw materials. Maybe when you are doing the colas, so there are some camps that the capping machine mistakenly just compress them and you can't use them again, so you have to throw it away. So it's a loss because not all the cars you input into the production you are able to pull out. Are we good? So to account for a production loss, we are going to use a feature called adjust quantities / value on hand. So how do you arrive at that? You click on vendors, inventory activities, and say adjust quantities / value on hand, right? So the first thing is the adjustment type. You are adjusting the quantity, right? That is, the quantity you have now is no longer the same because of the fact that some of those items have become a waste during the production process and you have to dispose them off, right? So in that case, we have to also write them off from the system. So let's say, for instance, during the production process, we have like maybe 10 bottles that happens to be a scrap as a result of the machine efficiency, and we have like 20 caps that also become a scrap. So how do we adjust that? So under this adjustment account, the adjustment account here means as a result of this wastage, which account is going to be affected. So the account that will be affected here is basically your production loss account, which is an expense account, right? So that's the account that will be affected as a result of this loss, because the loss of this item here as a result of the machine inefficiency or whatsoever issue will lead to an additional expenses. So adjustment account here basically is going to be your production loss account. So when you check under your expenses, you are going to see production losses. Are we good? Okay, so if you can't find it here, you can easily create one. So you can make it to be your part of your cost of sales because it arises from the production. So you just call the account production losses, right? So this arises as a result of the production process. So you're going to say save and close. Are you good? So that is your production. So you're now going to select the item that you lost one after the other. The first thing we said, bottle. We lost 10 bottles. We lost 10 bottles. And the other one is cap. Okay, here, sorry. Let me remove this. This is where you put the loss under the quantity difference. You are going to say minus 10. So when you say minus 10, normally it was 4903 here, but we lost 10. So it has reduced to 4893, right? Then you come to your cap as well. Normally your cap is 1110, but we lost 20. So you come here and say minus 20. So we have 1090 left. So your memo will be production loss or production wastage on 04/07/2021, right? So you can see down here, this is the total value of value. That is, this is the value, or this is the cost of everything you lost from this production. Are we good? So we have the value is 350. So when you are done, you save and close. So after saving, it's going to account for it. You have it as an additional expenses on your POL, right? So that is about the fourth one, which is the production losses / wastages. Are we good? So before we round up, we still have other things to discuss, but time constraint, this is almost 10 p.m. Do we have questions? Can we pull up our questions? Can we come up with questions, please? Yeah, okay. A question from Ibrahim. You're just joining. So when we are done with the lecture, I'm going to drop my WhatsApp. So we already have a group where everything related to the course is sent. So you're just going to send me a chat so that I can add you to the group and send the stuff. And also, for everybody that joined today, so you can kindly request for the link to download the video, because the section is actually recorded, right? So I have a question that answers Ibrahim's question from Annie Baby. From which module? So for the losses, you do that by clicking on vendors. Under vendors, you click on inventory activities, then you say adjust quantities / value on hand. So this is where you account for the production loss. I hope that answers your question. Are we good? Then any more questions, please? I still have few stuff to discuss here. We still have to discuss, I think, for these ones you can just easily read up because it's part of the tutorial note I'm sending to you because of time constraint. So this is basically on the difference between a group and an inventory assembly on Quickbooks. So you need to know the difference between these two so that when you are setting up your item, you don't mix them up, right? And this is just few stuff I want to let you know. What are the production related transactions on Quickbooks? We have discussed on everything, but I just want to quickly chip this in for you, right? So do we have more questions? Okay, Annie baby, I'm able to answer your question. So do we have more questions? We still have a lot to discuss on the manufacturing stuff, but like I said, we just have to look at the key areas such that you just be equipped on the way it works. So anywhere in the world in the manufacturing settings, you can't do without BOM, irrespective of the software or package. You can't do without production loss accounting for. You can't do without the conversion cost and all of that, which is what we have been discussing since, right? So these are the couple of stuff you come across in that industry, right? So for these ones now, these are all the production related. That is, when you are dealing with manufacturing, these are all what you are going to be using most of the time. The first one is ordering and receiving raw materials, and that is how we receive the raw materials earlier by using the bills. That is by using the receive item with bills. Then you have your build assembly. That is what you use to produce. This one is to receive raw material. This one is for production. This one is accounting for conversion cost. That is for your labor and production overhead. That is when you use your write checks. Accounting for production losses. That is when you use your adjust quantity of value on hand. That is to account for your production losses / waste. So this is in summary what we have actually discussed earlier, and these are all the production related transactions on Quickbooks, right? So because of time constraint, you can read up the differences between a group and inventory assembly. We have just 2 slides for that, so it's going to be part of the tutorial note I'm going to send to you tonight. So can we have more questions before we call it a day? Do we have more questions, guys? Okay, Samuel Bukola, she's not yet on the group. So he sent me a chat. I'm dropping the WhatsApp now. So he sent the chat, and I am going to add you to the group to drop all the materials. So that is the number. So you send a WhatsApp. Now the download links to the video. So I'm going to also put that on the group. So immediately you are on the group, you are going to get the download link for the video, right? Then Henry said, where can I find the BOM module? The BOM module is right here. When you are setting up a new item, as soon as the item, you have specified that the item is an assembly item, you can see this is the BOM here, bill of material. So this is where you specify all the items that is required or needed in producing a product and their respective quantities. Can you see that? So that's where you find the BOM. Are you good? So any more question before we call it a day? So for everybody that has not been added to the group, so you can, this is the number, you can send a WhatsApp. So I'm going to add you up. So that is where we'll be dropping everything that relates to the course. So that's where I'll be dropping the tutorial note for tonight, and that's also where I'll be dropping the download link for the video. So do we have more questions? Guys, do we have more questions? Okay, great. So Samuel Bukola should send a WhatsApp. So we'll meet again by Saturday. That is next weekend to continue. So our next industry is on financial service. That is the microfinance bank, the pension companies and insurance companies. So what is the uniqueness in this industry, and how does this apply to QuickBooks? Or aside from how does it apply generally? So we'll be looking at that at coming weekend, that is on Saturday, by same time, that is 8 p.m. right? So we'll be looking at the financial service industry. All right. So guys, the absence of any other question, so interested guys should send a WhatsApp so that I can add you to the group. That's why I'm going to be dropping the tutorial notes and every other stuff. So see you next Saturday, guys. Thank you for your time. I appreciate it.